Hey guys, welcome back to Jack and the Top Stock 10 out of 10K. Now in these videos, I'm gonna be picking out companies and reviewing their 10K filings with the SEC and pick out 10 things that I think are really interesting. And the company that I picked for today's video is GME. So we all know this stock, right? Don't stop, it's GameStop. So GameStop, we all knew it because of the infamous rise of the Sub-Reddit Wallstreetbets and their fight against the hedge fund short sellers of this stock. Now, in early January 2021, stocks were trading around $20 per share by end of January, so in less than a month. The shares were trading in the high 300 range, reaching even intraday highs of $480, right? That marks at least a 15x return within 1 month. So that's crazy. And so today we're going to be looking at the 10K filing for fiscal year ended January 30th, 2021. And this report has 89 pages. I've gone through and picked out 10 things. Here we go. Number 1 on page 6, it says that we purchase our new products worldwide from a broad number of manufacturers. However, only 10 vendors account for 79% of their entire new product purchases in the last fiscal. And starting off, can you guess which ones are the top ones? Nintendo, Sony, and Microsoft. They account for 31%, 22%, and 9% respectively. You know, the gaming industry is very competitive, but only a few vendors control the entire industry, right? So this means that they have to build really good relationships with this company to secure, releases after releases, so that they can provide the customers with the new products first. For point 2 on page 8, they're saying that an investment in our company involves a high degree of risk. I don't think anybody cares, but because you know what, regardless of the risk, people love GME, and they're listing out risks like COVID impact on the global economy, cyclical sales in new consoles, changes in consumer purchase behavior, and the intense competition in retail sales environment. Point 3 on page 16. They're saying that market price of our Class A common stock has been extremely volatile and may continue to be volatile due to numerous circumstances beyond our control. So they're saying that, you know what, it's not us. It's the people that are pricing them at their free will, and we're not really doing anything to swing it this much, right? On page, for point 4 on page 23, they actually give a really good comparative graph and a chart about their stock performance against S&P 500 index and Dow Jones Specialty Retailers Index. So if you invested $100 back in 2016 on January 29th into each of these stocks or indexes, by 2020, January 31st, you would have gotten over $180 in both the S&P index and the Dow Jones Retailers Index. But in GME, you would have been left with only $18.99. But if you just held on to it a bit longer, by January 29th, 2021, you would have had over $1,600 if you had those GME shares. So it just shows how crazy it was back in January when the whole world was focused on GME. For point 5 on page 28, it shows the store count information about the changes over the year of how many stores are in each region. So in both in all of the United States, Canada, Australia, and Europe, the store count went down. So this shows that because of COVID, of course, a lot of the stores were closed and became permanently closed. Point 6 on page 29, they talk about the different product categories that they carry: hardware, software, and collectibles. Can you guess which ones are the top ones? Obviously, hardware is number 1, with the top amount of sales, followed by software and collectibles. Point 7, page 30. It talks about the sales by geographic areas. It's very interesting because sales in all of the areas, the major markets, US, Canada, and Europe went down. Of course, we know that because we went through it. And was any of us shopping outside? Not really. But Australians, they were resilient. So Australia was the only region that actually had a sales improvement, an increase. So for the Australian viewers out there, please comment and tell us why you guys love GameStop so much over there. Point number 8 on page 49. There was a statement of operations that lays out net sales and cost of goods sold, things like that. There was actually improvement in loss position compared to the prior years. What happened last year was they had a lot of asset sales, like their corporate office, their corporate jet, and there was a decrease in operating costs. Very interesting though, there was an income tax benefit that was applied that brought down the net loss, and we're gonna talk about later at the end of the video. For number 9, on page 52, is the cash flow statement from operations, and we can see a really good improvement actually from the cash flow of operations. It shows that people are coming in and actually buying more and more of their goods. And you know, because remember back in Q4 2020, 2 major consoles were released, right? There was the Microsoft and Sony. So that brought in a lot of the business, and we will continue to see games being brought for these for these consoles in this fiscal, right? And last but not least, I don't know if a lot of you will be excited about this, but the company realized $55 million of income tax benefit in this fiscal. So I'm curious though of what happened, because in the prior years they had almost $40 million of income tax expense recognized. So if you think about that, you go from a $40 million expense to $55 million benefit. That's almost a $100 million swing, right? And that was something that I felt very strange about this whole calculation. And you know, I'm not an expert in deferred tax asset, so if any of you out there want to explain it further, that would be great. But yeah, so for me, you know, the way that the company explained it was a little bit messy and complex. And pro tip for anyone out there reading financial statements, if you come across something messy and complex, there's probably more to the story. So that's it for today when we talk about 10 out of 10K for GameStop. Bye.